Stocks on the move on the 5th of October 2020. So we'll begin with Regeneron. Shares of biotech company rose 5.9% after Donald Trump used Regeneron's experimental antibody cocktail as part of its treatment for COVID-19. Cantor Fitzgerald upgraded the stock to overweight from neutral, citing potential growth from the antibody treatment and dermatitis treatment. So we are looking at the chart of Regeneron. It's currently up 6.25%. And also on the slightly below its 50-day trend line and above its 20-day trend line. It is definitely a stock that has benefited from the COVID situation. You can see this is an unrelented assault upwards. It's just even trying to consolidate of late, but some of these things, some of the tracement of the price might indicate that over those weeks and months, a lot of short covering may have occurred, and for a long time also they were just trading right around the short-term trend line. Very fascinating and quite unique. Okay, well, let's go back to the summary page and see what's going on there. So let's see also Regeneron Pharmaceuticals. Okay, short percent of float is 1.57%. So today's volume is 3.1 million. And average volume is normally average volume is 751,000. Hence that the today and versus average volume change is 413.87%. So let's look at the chart. In the pre-markets, it was definitely active, hence this gap we're seeing over here. Okay, 60.1 billion. That's the it's a large cap. Definitely not trading in any or in the Russell 2000 index. Definitely not part of it. Okay, short interest we have here as 1.5%. So the next one is Crowdstrike. Shares of Crowdstrike rallied more than 4% after Goldman Sachs upgraded the cybersecurity company to buy from neutral. The Wall Street firm said Crowdstrike was a technology leader and had best-in-class economics with room for its stock to run. Okay, so let's see what Crowdstrike is doing. It's currently up 3.51%. Definitely was active in the pre-market as well, hence that gap. Mid cap 30.7 billion. Yes, over the past year has outperformed all the S&P and S&P components or derivatives, and indeed the S&P itself. So we didn't have any um, figure here, but to take 1.3 days to cover all of that, all of the short interest. And this is definitely during the lockdown, and after that, within just in a few days after that, after this correction, it has since continued to move up relentlessly. So from March 16th, it was at 32.93, and look at that. Look at that. It is currently at more than 140. This is really fascinating. 144.90. Let's go back to the summary and see what's going on. Seriously bullish. You can see. Okay, yes, we already indicated we have already covered this. 125% for 1 year, 141.91% for the last six months. For the last 1 month is 11.73. So the next equity is AMC Entertainment Holdings. AMC is also down. The movie theater stock sank more than 10% after rival Cineworld announced that it will close its theaters in the US and the UK. The decision comes after several major releases, including a new James Bond film, were pushed back until 2021. Last week, S&P Holding Global Ratings lowered its issuer credit rating on AMC from CC plus to CC minus. Okay, so the next one is DraftKings. Shares of DraftKings fell more than 6% after the sports betting company announced a public offering of 32 million Class A shares. The offering consists of 16 million shares from DraftKings and 16 million shares from certain stockholders. The company will not receive any proceeds from the sale offered by the stockholders. DraftKings will use the proceeds that it receives from general corporate purposes. So let's see whether we can see. If you don't see DraftKings here, we'll go and check them on the SEC. Okay, we have them here. So there's a good chance that DraftKings Inc. Okay, so yes, we can see that gap. It was active in the pre-market. It sank, and see over the past 1 year, 544.89%. 6 months, 420.65%. Last 1 month, 72.38%. DraftKings is a digital sports entertainment and gaming company. The company provides users with daily fantasy sports betting and iGaming opportunities. Okay, I mean, everybody knows DraftKings, so let's have a look at the charts and see what's going on there. So yeah, for some time he had during the summer it moved sideways for between the $30 range and $40 range. He moved sideways for almost 2 months. Yeah, so for 2 months. So that must have been a very disappointing time for certain market participants. So it's issuing more stock. Let's see, SEC. Let's see if we can find the disclosure there. So the DraftKings DKNG. So okay, yes, that's it. We have an S-1 disclosure here for DraftKings, and it is dated today, 5th of September, 5th of October. Yes, that's that one. So you will be able to find the link to this disclosure in the description box below. So let's go on to the next one. The next one is Stryker. The stock rose 2.5% after Evercore ISI added the medical technology company to its tactical outperform list and said it sees better than expected recovery trends ahead of Stryker's third quarter earnings. So let's see what's going on with Stryker. What's this? Okay, SYK. So it's currently trading at, it's up 2.26%. It's a large cap company with a market cap of $78.2 billion. Let's see, it should be, well, not so quite surprising. In the last 1 year, it's down minus 2.27%, and 6 months for the last 6 months is up 40.68%. For the last 1 month, 5.40%. Is a medical technology company, offers a range of medical technologies including orthopedic, medical and surgical and neuro technology and spine products. Okay, so it's not the sort of company that will benefit a lot from the COVID situation. So let's quickly have a look at the charts and see. Okay, see. Yes, very much sideways from April. It's been trading in the 170 to 200 and okay, quite a wide range. So yeah, but looks very much sideways. But all in all, I think much of that sideways movement. Yeah, even it looks sideways, but it is, definitely upwards. It is definitely an upward yet sideways movement it has had, of late, or since April, yes, or since the lockdown. Okay, so the next one is McDonald's. Shares of McDonald's rose more than 1% after Bank of America raised its 12-month price target on the fast food chain to a Wall Street high of $250, which represents a 10% gain for the stock. Bank of America said that McDonald's has benefited from customers turning to drive-through dining options amid the pandemic. CNBC's Jim Cramer also Monday called McDonald's a very high-quality company. Okay, let's have a look at MCD. Okay, it's up 1.1%. It's quite a large cap, $165.7 billion. So let's quickly move on to the next one. There's Idose Therapeutics, the biotech company, gained more than 42% after it said it will merge with Bridge Biopharma. Eidos shareholders have the option to receive either $73.26 in cash per share, with the cash payout limited to $105 million or 1.85 shares of Bridge Biopharma. So let's see what EIDX. Oh, did we cover MyoKardia? We have not covered MyoKardia. Sorry about that. Okay, it's up 41.12%. Idose Therapeutics. See what's happening. This is what happened in the pre-market. Hence that gap. Okay, it's a small cap, $2 billion. Okay, for the last 1 year it's up 43.82%. Last 6 months, 30.32%. Last 1 month, 26.67%. Idose Therapeutics Inc. is a clinical stage biopharmaceutical company. The company is focused on addressing the unmet need in diseases caused by transthyretin amyloidosis. It focuses on treating the disease by targeting them at their collective source by stabilizing TTR. The company's product candidate AG10 is an orally administered small molecule designed to potentially stabilize tetrameric TTR, thereby halting at its outset the series of molecular events that give rise to ATTR. Okay, so let's quickly have a look at the charts before we come and finish up with so this is the chart of Idose Therapeutics. So this is what we're looking at right now. So it's at an all-time. It's at a year high. A year high. This is the highest it's reached for the calendar year 2020. So this is where did it close? This is the 2nd of October. So he has skyrocketed. We're looking at 40.91% gain. Okay. Okay, so the next one is MyoKardia. Shares of the biotech name jumped more than 58% after the company said it's been bought by Bristol Myers for $13.1 billion, which represents a 61% premium on Friday's closing price. The acquisition of MyoKardia further strengthens our portfolio, pipeline, and scientific capabilities, and is expected to add a meaningful medium and long-term growth driver, Bristol Myers said in a statement. Okay, so let's have a look at MYO. Okay. MyoKardia is up 57.84%. So and its market cap is still 7.4 billion. So we still have a long way to go, I guess. I don't know if that follows. So the short interest is at 10.1%. What's holding the stock from moving up to meet up that bidding price? The price Bristol Myers Squibb is bidding at. Let's see, what do they do? Is a clinical stage biopharmaceutical company. The company focuses on treatment of heritable cardiomyopathies, a group of rare genetically driven forms of heart failure that results from biomechanical defects in the cardiac muscle contraction. The company is engaged in the business of developing and commercializing therapeutics. The company has used its precision medicine platform to generate an initial pipeline of over 4 therapeutic programs for the chronic treatment of 2 forms of heritable cardiomyopathy, hypertrophic cardiomyopathy, and dilated cardiomyopathy. Additionally, the company has 3 preclinical programs: HCM2, DCM2, and LUS1. Okay, so quite interesting. Let's see what the chart is saying. Okay, before we go there, let's see how it compares with S&P and the other related indexes. We have for 1 year it's up 156%. For the last 6 months, 201%. For the last 1 month, 30.2%. So has put call ratio 0.5, indicating that for the last trading day 0.5, indicating that market participants that are dealing with the options are prefer the calls, and that of the 30 days is 0.3. So let's have a look at the charts and see. Okay, you can see that. See what happened. You see that. What happened today? You can see that's now reflected on the chart. So we don't exactly know if this sort of movement, 57.87%, indicates that the stock is trading close or beyond its the 3 standard deviation. But indeed, with this sort of movement, it is definitely trading beyond its first its 1 standard deviation. At such levels, at 3 standard deviations, We're talking about tail or fat risks, indicating that at this sort of level that a huge correction might occur, or yes, at this point a huge correction might occur because of the fact that it has moved significantly, from its average trading price of or movements, So, well, in as much as there's a takeover in imminent, you really have to also be careful. Well, at the same time, you might say, what would there be? There's no risk involved. There won't be any risk, but well, um, do your research and hold out and see what's going to happen. At the same time, again, yes, never say never, because in as much as Bristol Myers Squibb has come up with this news to acquire them, it still hasn't actually taken place. So all fingers crossed. It should probably take place, but it hasn't taken place yet. So the risk is there. It has moved significantly. As such, you have to be careful. Okay. If you're new to this channel, subscribe, like, and share. Subscribe, like, and share. Thank you.